Well, it's a little bit mixed out there in the Greater China region on the markets at the moment. The Hang Seng Index is tracking down by around about 0.25%. Emily Chan is with us now to have a chat about what's going on in that market. And you know, we've talked about IPOs. Bernie, you and I have had plenty of discussions about IPOs in particular over in Hong Kong as of late. There's been some interesting developments though. Sun Art has delayed its IPO, which certainly seems to have come at the very last minute.
Indeed, Oriel, at the very 11th hour, we have news that Sun Art, which was supposed to come into the Hong Kong market and debut today, pull out at the last minute, and basically what they've done now is delayed their IPO for 2 weeks. This had to do with a numerical error in its prospectus. The company saying that it would not impact the company's valuations, but what happened was that they had a 1-to-26 stock split, and this was not reflected in the prospectus, and now they're going to be giving investors the opportunity to assess the potential impact of the EPS clarification on their investment decision. Now, originally the company raised $1.1 billion after pricing their shares at the top of the range. $7.20 was what it was supposed to go for, and that represents a very expensive 31 times forecast earnings. This was a very popular IPO. This is a hypermarket that's a joint venture between Taiwan's Runtex group, which is a conglomerate, and France's Auchan, which also runs supermarkets over in Europe. Now, as I mentioned, 41 times subscribed, and a lot of investors trying to bank on the surging consumer demand that we are seeing over in China. But Sun Art didn't come to market today, but we did have the likes of Prince Frog, and if you want to take a guess at what this company does, mainland children's healthcare products. They came to the market today after raising about $100 million. It too was pretty popular, 27 times subscribed, but a down day we are seeing. It's off the day's lows. It did pull back some 8%, but currently sitting at $2.58 versus its issue price of $2.60. Now we want to get some more expert opinion on what's happening in the Hong Kong IPO market, as well as the other stocks that he's keeping an eye on. We're speaking now with Philip Chan. He's the director at ShenwanHongyuan Securities. Good morning to you. Thanks for coming in, Philip.
Hi, Emily.
Now, we are seeing a lot of companies that come to the Hong Kong market pull out at the last minute, but at the same time, we also have a lot of big names like Samsonite and Prada. What are you making of what's happening in the IPO market right now?
Well, I think that, you know, the investors are being, obviously, they're being very choosy, and also that when the companies come to list, it really depends on the market conditions at that time, whether it's going to go well or not. However, and also it's a trade-off between what the investors expect will happen in the next few months, because obviously they're not buying to flip the stock. So that's the reason why some of the consumption type plays which is listed have generally been well received, or they've been well sought after by investors. This case with Sun Art, I think, is just is a technical issue, so that's nothing to do with the investment case.
Right. Now, for Sun Art, it was a prospectus problem.
Yeah.
Earlier this week, we did have Moody's raise a number of red flags on Chinese companies. What is an investor to do when they want to invest into an IPO? What type of company should we be looking at?
Well, I think that investors are voting with their feet. I mean, they're going more after the consumption plays, because that's more, it's more visible, and it's more, say, understandable from a day-to-day viewpoint. We've been, looking at companies which are actually in established, say, basic industries in China, which are having their supply controlled very carefully by the government. Now, this is not normally the way that investors would look at it, but the thing is, we just think that there's investment opportunities in those industries. That's all.
And these, Philip, these opportunities, of course, aren't just IPO opportunities. There are also other stocks that are on the market. I noticed from your research, one of your buy calls is on, correct me if I get the pronunciation wrong, but Anhui Conch. This company, of course, just said yesterday, in fact, that it expects its first half for 2011 year, the net profit to more than triple because of higher product prices. And of course, we're also seeing a lot of strength come through companies like these because of China's push to build more affordable housing.
Yeah, that's right. But also at the same time, China's trying to eliminate capacity on such industries like steel, like cement, like aluminium, electrolytic aluminium. And it's because of this that the prices are going to remain firm, and I mean going forward, and demand is going to pick up. So you've got this squeeze on both sides. So that's where we see the investment opportunity, at least in the next, 6 months to longer, anyway.
Oh, how much upside? We're talking about companies like Anhui Conch is one, Manshan is another one of your top plays. I mean, how much upside can investors expect by buying into these companies at the levels that they're at today?
We look, I mean, for Anhui Conch, we'd still look for something like maybe 20% from here on a 6-month view. So roughly the same for Manshan, because, as I've said, we don't think that the market has factored in all of the issues completely, anyway, into the price of these stocks. So that's why we think there's some more maybe positive upside.
Okay. All right, Philip, thanks for chatting to Emily and I. Do have a fantastic weekend. We'll chat again in a few weeks. Well, we are going to have more on the markets for you after the break. We will be coming back with the opening numbers for Japan's afternoon session. We'll be right back.